75% of the volume of all trades today are down to algorithms. So it's not people like you and me, it is computers sitting there firing off trades. So I've got you here tonight just to talk about what is happening inside the markets with algorithms and how that differs from sort of 2, 3, 4, 5 years ago to today, and what you can do to try and drastically reduce the number of stop outs and actually take advantage of this situation rather than hit problems with it. By all means, there's a little chat box there. If you want to chuck a question at any time, go ahead. Anybody wants to open their mic, I'm just going to do a very short presentation. Anybody wants to open their mic afterwards and ask and chat and tell me about their experiences or share your experiences, that's great. But in the meantime, I'm just going to go through this short presentation and try and help your trading and try and get you to think about what's going on out there. So before I do that, this is me today, just a couple of contracts here on the NYMEX exchange in the US. You can see up there my target 57.99. Oil would just go a pip under the big numbers, and you can see my stop was 46. That's a break-even stop. So I got 50. Can't do the maths. 54, 53 pips on oil. I missed the Dow, and I'll talk about why I missed it later on. This is also an overnight trade I did. I do trade stocks, and so what you've got here is this is CLVS, the stock CLVS. I bought it at $8.77. I sold it the next day at 10.85, or just under 10.85 after I did the screenshot. So 24% overnight. Bought it back end yesterday before the close, sat in it and saw a lot of volume into the pre-market, which is one of the reasons why I like these NASDAQ stocks. And it was already over. Most of the move was over before the market even opened. But that's another conversation. We're not here to talk about specifics about day trading NASDAQ stocks. Just wanted to show you that. So let's move on. Let's just get the presentation. Typical. Right, a quick thing about me. Scalper School has been around since 2009. Trade the Easy Way is my parent company, where anybody who's interested in trading stocks at professional level, or the other end of the scale is new to trading and needs to really get your technical skills up, then take a look at tradetheeasyway.com. But I'm here to talk about scalperschool.co.uk today, and algorithms. So a little bit about me, and then we're going to get straight into this. So like I said, Scalper School was set up 10 years ago. It originates from a lot of hundreds of hours I did way back in 2005, 6 and 7, when I was trading oil and soybeans. So soybeans on the Chicago exchange and oil on the US NYMEX exchange. And from that, from all those hours, I realized there was something significant happening most days, if not every day. And it was a very, very simple, I took some simple everyday tools that you and I probably all use. And then, hi Malcolm, good to see you all. Yeah, thanks for coming. And put it all together. And so Scalper School is unique, not because I'm using anything different than anybody else does. What's unique about Scalper School is the way I combine different tools together to bring them together to make one system. That's the most important word in all of this system. Right, now let's talk about algorithms. Enough of this, let's just talk about algorithms. So let me call up the chart. Right, So trading changes. You see slightly different price action in the markets every single day, but you've got to have a system if you're going to survive in this market. Because if you do the same thing every day and expect the same results, then you'll make money. Now, what's going on in these markets at the moment, if you've got 75% of the volume of all trades in the market being dominated by computers, what you and I are competing against is a very calculated, emotionless machine. And so it's our job to work out exactly what these machines are doing, to anticipate them, and stay on the same side as these machines. And if you do that, I believe we can all make consistent profits. So if you've been taught about how to do a certain type of pullback, and that was sort of 2, 3, 4+ years ago, forget it. That's gone. The kind of pullbacks you used to have before algorithms really dominated. They dominated for quite some time now. But the kind of pullbacks and stops you used to have are out of date. So I'm going to talk to you about how you can be using algorithms today, how you can be using stops today. I'm going to show you an example of where these algorithms are kicking in. Now, typically, what you would do is, if you are a Elliott wave fan, you would look, well, I would look for a wave 1, and then I would look for about a 60% drop. Okay, there's wave 1, here's wave 2. I would look for about typically I'd look for about a 60% drop, and then look for wave 3. Now, wave 3 is normally the most powerful. That's old hat. It does work in certain circumstances, but not on the bigger picture. What we're seeing is the market's overreacting because it's machines that are doing it. So what you've got here, let's take an example of oil. Now, this spike here, let's go down to a smaller time frame. Let's go down to a 3-hour chart. Kill this because I don't use 3-hour charts anymore. What you've got here is you've got a market that was just steadily waving around. Let's just format the waves. So we were waving up, we had gentle pullbacks. So this was all fine, this was all fine. But then you get this, because of the Saudi terrorism attack, you get an overreaction. And then what happens is, so you would expect, ordinarily, with a move like that, that's a really nice move. If you're a chart pattern follower, fantastic breakout pattern. So ordinarily with a move like that, you would look for a 60% move. So if that is 100% of the move, you would look for this to come back to 60%. So if that's the whole move, I'm eyeballing this now, that's 50%, and that's 60%. So you do get that, but it just slips into resistance area and then drops further back. And then even after a 3-wave correction, you still get these lower moves. So why did I buy oil today? It's because we've got this over. Forget all the news. There's a lot of arguments to say that, well, there's not arguments. The fundamentals of oil is there's plenty of supply. There's no real strangle on supply. So it's nothing unusual to see something of that example to drop down here. But what I'm saying is, if you've got a market that is sticking to a certain pattern, ordinarily would get bought, and you're falling out of here, then you've got to, and it's overreacting, it's broken key support. So there's the main support, and here we are. So the main support is $60, and here we are. We've just tested 57.38. In fact, today we've had invents, and the invents were suggesting that there was a drawdown that will ordinarily trigger a big move anyway. But even after the drawdown, we saw a big, huge drop to the downside. So what I'm saying is, these markets are going on runs. They are not reacting to typical wave patterns, and they are overreacting and giving you much steeper pullbacks than you otherwise expect. Here's another example of, let's talk about, I've got a list of examples here. Let me just go to my list. Let's look at the Dow on last summer on a daily chart. Let's go back to that daily chart. So you can see here's last summer. So the market was chugging up quite nicely here into this. So we had a nice little pattern to the upside, and then just fell right off. Little push, and then we get this pattern down here. So this is, ordinarily on a move like that, you would expect that if that's decent wave one to the upside, and that's 50% of the move, you would expect this move to sit around here and then push back up again. But here we are almost, we're not that far off 100% retracement at the low here. So these markets are overreacting, not sticking to conventional trend patterns, and getting overreaction and doing a huge stop run, really shaking the market out before it's pulling back again. And look, you get another grind higher, and then you get another breakdown, another severe oversold position, until you eventually get this wind up, and here we are in a 5-wave pattern up here. Okay, so I think the way you can, there's several ways you can do this. I think the days of buy and hold, the days of buy and hold are long since gone if you want to really maximize these kinds of moves. But what I think you need to do now is, particularly if you're a day trader, the last severe move we had was right down here on the Iran missile attack. And so we were jogging up nicely, had a really nice severe overnight move, but far from the markets, just committing to a sell here. This is just a overreaction now, an algorithmic overreaction that led to a steep climb to the upside. So if you're seeing moves, you've got a nice wave pattern to the upside. And you suddenly get this severe reaction to the downside. My suggestion is you don't walk away from this. Pick up on the key levels that you are seeing here, and you can see we've got a 1, 2, 3, 4, at least 4 areas of support down here. Again, we overshot it. So 28,200 was the key support area. We broke it, overshot it, and immediately dived back up. So this is the kind of, so the old wave patterns are out, and what we've got now is, okay, there was a fundamental reason, there was an event, but this is so common now. So the important thing is, if you've got a strong market and you get a severe overreaction, then these are low risk entries. Now I'm not suggesting for 1 minute that if the market dives you suddenly need to jump in. That's the last thing I'm suggesting, because we all know, well, I'm sure most of us know, bottom picking is not a profitable business. Reversals are very, very profitable, but you need to know exactly what constitutes a reversal and not get in the habit of bottom picking. I know from first-hand experience that if you become a bottom picker, you will just kill your account. And I've been there and done that and got the badge. Okay, so I'm not suggesting for 1 minute I'm some fantastic trader, far from it. What I'm suggesting is I'm a trader who's got hundreds of hours of experience, and if you want to really get in on some of these moves, then these are the kinds of setups that you need to look at. Now I would actually argue that, okay, benefit of hindsight, but these three-wave patterns, so 3 is a fib number, and I'm a huge fan of fibs. So these three-wave patterns are phenomenally successful. That if you know how to judge them and handle them and jump on the back of them. This is the time of year when typically, these markets are very, very expensive. The price ratios and the extension of the components in the Dow are very, very high. So there's a lot of technical issues that will combine to suggest that these markets are oversold. Now, one other thing you need to know about, particularly getting into 2010, what's going to happen in 2010? Well, we've got a lot of divergences up here. So if you are looking for reversals and looking to get tuned in on these markets, you need to know about several factors that algorithms use. And these factors are the following. They love to move back to mean averages, standard deviations. I'll talk about that in a minute. That's the prime motivation of these programs, to send the price back to standard deviations and averages. So moving averages do, although I'm not a massive fan of moving averages, they do have a bigger part to play in these markets. The other factors are, as I said before, these algorithms overreact. They constantly overshoot key support levels. And just when the market seems to have a lot of fear, they are presenting you with potential really good opportunities to get into these markets. So that's why, forget the news, forget the journalists, forget the experts. The primary role, the primary factor that's going to keep you the right side of these trades is nothing short of hard work and putting in the kind of planning into your trades that are going to get you in and navigate you around these overshoots. And don't forget, I don't know if any of you listen to Bloomberg or even anything, BBC, Bloomberg, CNBC, whatever. You've got to bear in mind these journalists. Now, I know this firsthand. I've been on the BBC, Sky News, Channel 4, all the rest of it. I know firsthand these journalists are actually very lazy. If you get on one of their lists, they'll just constantly ring you up and try and drag you into the studio all the time and take up a lot of your time. So I had to just come off these lists because they were just taking up too much of my time. But the reason why I'm explaining that is because if you are listening to Bloomberg and reading newspapers and they will, what you're seeing in those on those programs and those papers is not generally not very fine-tuned exhaustive research. It's a journalist who's yanked a story together, grabbed a couple of people, allegedly gurus or experts or whatever, and pulled a story together. So my message is block out the noise. You've got to block out the noise and concentrate on what the markets are showing you, because these algorithms are presenting a lot more opportunities than they are threats if you understand what they're doing, if you understand how they're working. and you can adapt your trading to trade around them. Let's look at some other examples. Let's have a look at, let's have a look at the end of 2018. Let's go back to the daily a second. Let's have a look at, because this was another extreme move. Oops. Right. So this is what, and then I'm going to talk to you about some key things to watch out for. So here we are. This is now when this market was selling off down to 21.5K, this was still an economy that was producing 2.5% growth. And yet these markets dropped from a high of nearly 27,000 to 21,500. So what's driven it? Well, it doesn't matter. What you do need to know is that there's a three-wave move. So we overshoot it on December 3. So we come above this three-wave pattern and immediately close lower. So that's very, very bearish. And these situations where markets overshoot are really, really common. Silver did this about 18 months ago. Silver, I was watching silver, looking for a reversal, and I pretty much know when the reversals are on because they will take it in the direction, they'll take it under or over a key level and immediately close it back inside. So I'm not sure what this is, about the 4th or 5th of December. We start a long, beautiful decline back into, I think it was 29th of December, literally the last day of the year, wasn't it? Okay, so just watch out for these patterns and these overshoots. And then the actual real significance of this move is when we start breaking down here. Once we lose this footing, that's it. And then, but if you then put, if you want to know exactly how to trade that, if you get this situation, if you then start fibbing it, and you can see how this key area here, 22,800, was breached and immediately closed above. Okay, so why did I trade oil today? Let's really drag this down to an intraday session. Yeah, okay, it's still running up. I could have got some more pips out of it. This is the main reason why I like the low. This is the work I've done on the daily chart. Here's this line here is the main support channel. And just like that drop into the back end on 2018 on the Dow, we breached this channel. So if we now close back inside this channel, that's a really, really good bullish move, which could take us somewhere back to at least 60. Who knows, maybe even more. As long as we sustain this move above here. But look at the low. The low was 57.45. I think the daily chart breached that by about 5 or 6 pips. I took 46 on there. 57.40. Yeah, 57.46. I took the exact fib level here, and then pull that back. Let's drill down to the smaller time frames. I called this in the room as well. So it's all in the public domain. And that was my workings for the for today's move. There's the bit. So it's a big sell-off. Big sell-off after invents. Came back down to this 40. 7.45. That's where I started buying, dipped underneath it, and then we almost come back to the invent level. So this is a typical move would be a 1, 2, 3-way move. Well, that's completely out of the window today. So I concentrated on this level here and then took a 75 pip move into resistance and then took it up. So what you need to do is to, in my mind, to stay in these trades and manage these kind of algorithmic mechanized moves you're going today. Is you've got to put the hard work in, and you've got to have a system. You've got to stick to the rules. You've got to have a set of rules and stick to them, because if you can't cut out the emotion and you haven't worked out what these machines are doing to these markets, then your chances of making a decent profit and surviving in these markets is slim and probably maybe zero. Hence the reason why the success rate is relatively low for people coming into this market without the experience and the education. Okay, so just to summarize then, in terms of the technicals, what I'm looking for is I'm looking for key, really major pivots. I'm looking for markets that overshoot and then immediately pull back into key support areas. Price clusters, your major support resistance areas, good old-fashioned basics combined with this structural analysis of the charts. And that's the thing with trading. None of us like 9 to 5 jobs. None of us, I certainly don't like 9 to 5 jobs, don't like commuting, etc. But it is about that regime and that structure that you need to apply to your trading if you are going to succeed. Anybody got any questions? You've all been very quiet, so I just wonder if you've got any questions. So I could have squeezed a bit more out of this, but had a lot to do. Didn't want to sit there and give profits back, bearing in mind how bearish this has been. So I was happy just to grab whatever pips I got and walk away from that. Okay, so if you want to, so you've seen some examples of some trading I've done here. If you want to come on the program, now the beauty of the program is it's all about being in a live trading room. What we're doing is, in a room like this, we are trading a very, very specific system, a very precise system, where we are looking at the open market, and we're also got a very, very specific method of analyzing the action during the week in that particular week that we're trading. And that's crucial. That's a crucial tool that we use. It's actually is a standard tool, but used in a very different way. We use that to combine the price action we're seeing at the open or key reversal times. Typically, key reversal times are 30 minutes after the open, which for oil is normally 2:30. For Dow, 3 o'clock is a typical reversal time, and then you've got. I like trading the last hour. The last hour yesterday gave back some profits. Yeah, last hour yesterday, but 8 or 9 times out of 10, you can get some very aggressive moves into the last hour. Okay, so if you want to join us, it's a very intensive program, and you'll spend a minimum of a month in the trading room with us. We're all trading the same system. We're all applying the same rules. And so if you want to join at the old price, you've got 1 day, 5.5 hours at the old price. Now I've not increased this for over 2 years. So it's the first price increase for, I'll come back on to that question in a minute, Howard. Thanks for that question. So if you want to join us, come on to scalperschool.co.uk, or just pop that in the chat room, and then I'll and so you then need to come to the PayPal button down here, click that away, pay the fee on PayPal, and I can grab all your contact details off of PayPal. Right, so let's answer Howard's question. How do you think the Dow will go before a major pullback? That's a really, really good question. I suspect, I'm hoping that we will breach this high here and then fall back into it. If it, let me make sure this is accurately drawn. So I think one of 2 or 3 things can happen. And I'll show you the divergences as well. I have to cancel, I have to clear that off. Okay, now I can see it properly. See the beauty of these bar charts, it just got more clarity. Literally hit that right on the nail. What I would like to happen is I would like to see this pop above here and then come back into that channel. Or if we close under this level here and get us intraday sell signal around that level, then I would like to get short. I am looking to get short at this stage, purely on the basis of the fact that we've got divergences, but I'm not going to start getting seriously short until we've got some evidence. So if I now look at, I like MACD. I think it tells a good story. You can see the divergence. So this is typically, so we're making new highs and lower highs on the MACD. And more importantly, look at the histogram. We have come all this way. Here we are halfway through January, and the histogram is pathetic. It's only just above the midline, whereas the previous push higher saw a decent move. When we're up here just before Christmas, the histogram was really high. So these are telling me that we're basically running out of momentum. We look as if we're running out of momentum, and these highs could be getting sold into. Yesterday, we saw a high getting sold into, and even today, these markets are struggling with these highs. I always find if a market charges up and leaves a lot of people behind, you tend to get, let's look at a 10-minute chart. There we are, we get a massive 10-minute move, which is 900 roughly so 115 pips in 10 minutes. It's crazy. So a lot of traders are just left out of this. So I think, I call it a boomerang trade. I think intraday, well this week, I still think we could get a full retracement down to this 900 level. And yesterday we saw that as well, didn't we? We ground higher and then we just dropped. And this is what happened into the close. We looked as if we were going to hold this support, and then it just messed around and didn't do much. Okay, so I'm looking for a break above, sometime this week, I'm looking for a break above these highs and then a sell signal. And ideally, the best signals, if you really want to, hold a trade, look for a 4-hour move. Here's my 4-hour chart. Look for a sell signal, lower close under this 60 mark. And then I would get short and then stay short for a while and see if this can, and then I would also scale in and scale out on that trade based on any sort of real structural failure up here. So come back into this apex, start closing down here, and then we could drop quite hard. Now, obviously, I don't want to be bearish on a market that continues to make new highs, but I am conscious, I've got my eyes firmly fixed on that daily chart and the divergences that we got up here, and I do think we need a decent pullback. So if we are going to pull back, where are we going to go? So if we do fail here, let's get rid of this MACD now. Let's get this back to the way I want it. If we do come out of this and break this support, I think we could potentially come all the way back down to some of these levels here, but possibly, I would say 27,000. I think we could get a good 2,000 pip drop if this market caves in and gives way. Let me just grab a drink. Okay, so if this does happen, this could be a very profitable move. Like I said, I don't want to get bearish on a market that is still sitting up and holding up in these highs, but I do want to see if I can get a signal to look at potential push to the downside. Okay, interesting one is gold. This has been a phenomenal. This is a lovely spike higher. This is the structure that we saw in the back end of last year before we snapped up here. This is a structure down here in May last year, and typically they're nearly all based on these three-wave moves. So the three-wave pattern we've got at the Dow highs is potentially the complete reverse of this. All right, so I've been talking for nearly 40 minutes. Any questions? Any questions at all? Let's go back to the Dow. Oil's really not doing much. It's only gone about 20 pips over my exit. So that's what I'm keeping an eye on. I'd need to at least see a close under the 29,000 at least. A peak above and a push back inside will be great. But you know, once we get this breakdown, if we can fail under this level here, if we can close under that support, then we could be in for some interesting times. Okay, I've got people drifting away from the room, so final call for any questions. But it's great to be in a room and sort of sharing trading ideas and, you know, I'm sending out alerts based on the rules we've got. So you get, I run the room for 4, sometimes 5 sessions. I open it up for non-farm payroll and rate decisions. And otherwise, it's alerts throughout the week as and when setups are triggered. And you can see the here's the room. You can just see plus 75 oil. There's the I won't go into detail now, but anyway, the calls are in there. Right, okay, nobody's asking me any questions, so I'm starting to get hungry now. So I'm going to grab a meal now and take a look at see if the markets are setting up in the last hour. Otherwise, just sit on profits and leave it at that. All right, thanks a lot. And I'll send the recording out and hope to see you again. Thanks, guys. How are you, Malcolm? Good to see you. You weren't well for a time. Are you okay now? I think that was a long time ago, though. Maybe out of sync with that. Good. Are you trading daily? Yeah, by all means, yes. Very much so. I've got, if you want, I have done some updates to Scalp School. I'm running it again on Saturday. It'd be great to have you along on Saturday if you're able to join us Saturday morning, because I've done some subtle refinements which are working well. We did a refresher last year. Okay, well I have done further upgrades if you want to join us. But yes, I think I've got your email. I will drop you a line about coming back in the room. Be good to have you back. Okay. All right. Well, yeah. Thanks. Good to see you. Glad to hear you're okay. And I'll yeah, I've got you on Skype, haven't I? I must have you on. Let me just check Skype. I'm sure I got you on Skype. I remember seeing your name. Anyway, I've got your email anyway. Good. I'll drop you a line. So I'll come up. I'll finish this. I'll close up here and then I'll drop you a line straight away so I don't forget. Good. And I'll see you soon. Bye. Have a good evening.